this. Okay. So, like I said, your final exam is going to be on next Wednesday, December 9th from 4:30 to 7 p.m. Please make sure you show up promptly to that online, again, like we normally do, but realize that if you don't start the exam within the first 5 minutes, I shut it off. So I'll send out an email reminder to everybody just telling them that they need to start promptly. If you can't start promptly, you have technical difficulties, realize that's why I give you plenty of practice, making sure that you are set up. So proctorial, everything is still as per usual. So let's take a look at the final exam folder. So I give you a practice exam for the final exam, both with proctorial and without. Make sure that you at least attempt the one with proctorial at least once. Attempt that with proctorial at least once. If you have technical difficulties, contact proctorial. There's nothing I can do on my end, so you know the drill. We'll talk about the final exam review notes in a second. So our schedule, let's see here, where are we at here? Calendar. I think we're all pretty clear about what's waiting us. So final exam is on that date. If you had some sort of conflict with another professor's exam, you need to let me know that right away so I can make those accommodations. I know some professors are kind of going off the script with regard to their final exams. You need to let me know that as soon as possible, okay? So I can arrange a makeup time for you to take the exam. Other than that, I'll plan to see you at 4 o'clock on Wednesday, December 9th. Or excuse me, not 4 o'clock, 4:30 is when we start. So jumping into office hours. Office hours, I will have office hours Thursday, tomorrow, during our normal time, 9 a.m., 11 a.m., then from noon to 2. So if you have any questions about the homework or the practice exam or anything at all, just feel free to jump in. I will be on there. Same thing for Tuesday. I'll have normal office hours on Tuesday, the day before the exam. If you can email me questions in the meantime, but I ask that you please don't send me an email with a batch of questions about certain problems from the homework or from the practice exam. I can only deal with those one at a time, just for the sake of addressing everyone in a timely fashion. So my preference is, if you have questions on any of the problems I give you for practice and preparation, is you jump onto my virtual office hours so we can talk about them. Final exam information. So let's talk about the review notes in particular. So up at the top, what's different about this particular set of review notes? It's a final exam. It's still taken online via Blackboard with Proctorio. Technological capabilities are your responsibility. You must use a calculator via Blackboard. You must show your scratch paper at the beginning of the exam. You don't have to send me at the end of the exam. So once you get going, realize you'll have plenty of time to get through the final exam. You have 2.5 hours. It's a standard time. There's 50 questions, so it's not quite double. I mean, I'm giving you 2.5 times the amount of time to get through a multiple choice set of questions on the final. So final exam is not 2.5 times the size of a midterm. Okay, it's 50 questions. 20 of those will be related to chapter 11 and 10 material. The other 30 are comprehensive. So think about this final exam as essentially like a midterm plus a comprehensive exam. Okay, 2 score points each, which means that you have a total possible available to earn of 100 out of 100%. So there is no extra credit on the final exam. No makeup exams except for extreme emergencies, and technical issues are not a reason for a makeup exam. So make sure you're on top of it. You can get it done without any hiccups. Everything is testable, of course, as per usual. Material from lectures, textbooks, homework, etc. We'll talk about this detailed information in a second here. There are 50 questions. There's about half of those are conceptual. So I sort of denote these C, M, and P, so that way you can kind of see which ones they relate to down below. About 20% mathematical, the other about a quarter of it will be procedural. So when I say conceptual, here's what I mean by it. General knowledge and understanding about the concepts, the terminology, definitions, theory, etc. About half of the final exam is based off of that. The mathematical stuff is where you apply those concepts in calculation. So add, subtract, multiply, divide, use some algebra for these sets of numbers. Okay. Procedural is taking the concepts and applying them to the accounting process. So if there's a journal entry required or a ledger posting, that's what's required for procedural. They tend to be the more difficult ones, I think, because they also potentially involve some calculation, some math. But down below, here's a list of all the learning objectives that are tested on the final exam. So do you need to go back and review the entire chapter, each chapter in its entirety? No. So for chapter 1, I'm only going to ask you 3 questions. One question about learning objective 1.2, 2 questions about learning objective 1.3. So go back, review your book on those parts of the chapter, review your lecture notes, review your homework that is specific to those learning objectives, review those. What types of questions might I ask about those topics? Well, I'll ask a concept question. So again, all this information up at the top here about C, conceptual, M, mathematical, P, procedural, I actually tell you the nature of the question next to each one of these learning objectives. So for learning objective 1.3, there are 2 questions. One of the questions is conceptual. The other one is mathematical in nature. You come down, learning objective 4.4, there are 2 questions. One is conceptual, one is procedural. Okay. So think about procedural as probably need to know some journal entry, some debit, credit type answer is required in those. As we get further down, we cut into learning objective 10.1. So there are 4 learning objectives in chapter 10, 3 for chapter 11, and the homework for 11.3 is due tonight. So make sure you get that done because there's at least 4 questions on the final exam or 8 points worth of questions on the final exam for that particular topic. 10.1, 3 questions, all conceptual. 10.2, they're all procedural. 10.3 and 10.4 is a bit of a mix. So I've got 10 questions here for chapter 10, and I've got 10 questions here for chapter 11. So 20 questions total related to the most recent material. The other 30 questions are related to the previous material, but don't go back and review everything. Just pinpoint your efforts on these learning objectives to cut down on your time. All right, let me go back to the top here. So what are the topics that tend to drive people nuts about this final exam? Well, there's a lot of them, right? Because we've got several different, we've got a bunch of chapters involved, heavily weighted towards, of course, the most recent ones. But statement of cash flows at chapter 11, know when the statement of cash flows is useful or not useful. What's its purpose? Why do we have the statement of cash flows? What does a statement of cash flow show or not show? And this one, I think it's worth mentioning that, or reminding you that I'm only worried about the indirect method of the statement of cash flows. The direct method, I think, is also talked about in chapter 11. You may have gotten some questions about that in your homework. I'm only worried about testing you on the indirect method. So that being the case, what does a statement of cash flow show or not show using the indirect method? In the indirect method, the statement of cash flows will show net income. The big difference between the direct method and the indirect method is the statement of cash flows in the indirect method starts off by showing net income and reconciling that to cash from operating activities. So the financing and investing sections of the statement of cash flows is the same between the direct and the indirect method. The indirect method takes a different approach for the operating activity section by starting with net income, and then accounting for the changes in current assets and current liabilities, and also accounting for things like depreciation expense. So just make sure you have a visual in your mind about what the statement of cash flows looks like under the indirect method. How's the statement of cash flows organized? Operating, investing, financing activities. What's the most scrutinized portion of the statement of cash flows and why? Well, that would happen to be the more challenging one, obviously. So when I talked to you about, when I left the cash from operating activity section last to talk about on Monday, because it's the more complicated one. It's a little bit less intuitive than the other 2 sections. So that's the one that's more scrutinized because there are so many things involved in a company's operations that cash is involved in all sorts of specific transactions. It's also most scrutinized because, hey, It's how whether or not it determines whether or not the company is able to generate positive cash flows. The income statement shows net income on an accrual basis, but what's net income on a cash basis? That's why we scrutinize over the operating section so much. How do the various parts of the statement of cash flow relate to the balance sheet and income statement? Well, again, you look at the balance sheet to see changes in assets, liabilities, and equity accounts. That helps you fill out and complete the statement of cash flows in the indirect method. But the indirect method also requires you to bring in information from the income statement, specifically the net income number. So that's how the indirect method relates to the balance sheet and income statement. How certain transactions affect the statement of cash flows? How is the statement of cash flows prepared in the indirect method? You just want to be aware of if a transaction involved the purchase of equipment for cash, how that affect, say, the financing activity section. Well, we would see a cash outflow related to a purchase of equipment. If I give you certain information, be able to use the indirect method to determine cash flows from operating, financing, and investing activities. So I give you plenty of practice on the homework and on for chapter 11, as well as some practice problems for preparing for the final exam too, all on my accounting lab. We'll take a look at that in a little bit here. Chapter 10 talks about the stockholders' equity section. So what are the basic rights of stock ownership? Recall the 4 basic rights. What are the fundamental accounts that comprise stockholders' equity? If you go back and review your notes, you'll note that you'll recall that primarily a company is going to have common stock and retained earnings. Those are the basic line items that you're going to see on the balance sheet. It can have other accounts for preferred stock, treasury stock, and things like that, but realize that the fundamental ones, at the very least, you're going to see common stock and stockholders' equity. What are the types of or classes of stock? Common stock, preferred stock, treasury stock. Which class of stock are you most likely to see on stockholders' equity and why? You're most likely to see common stock, not so much the other ones. Preferred stock and treasury stock, not really, not a common thing to say. What's the difference between shares authorized, issued, and outstanding? Recall that when the shares authorized is some ungodly high number, such as 25 billion shares or whatever. That's the amount that's determined at the inception, the start of the corporation. That's the maximum amount the corporation is allowed to issue in terms of shares. Whether or not it issues 25 billion is a separate issue, is a separate deal. Issuing shares, if we issue, say, 1 million shares, those immediately become outstanding. If we decide to buy back some of those shares from investors via the stock market, whatever, the amount outstanding will decrease. So the amount that we buy back represents treasury stock. Total amount issued is common stock. Treasury stock is nets that amount of shares that we have issued down to a lower amount outstanding. What's the difference between par value and market value? If a stock has par value, and realize that the purpose of par value is just to represent some sort of legal basis of capital. But if a company has a par value stamped on its stock, it's going to issue the stock at a much higher market value or higher selling price. So if there is a difference between selling price and par value, that amount is going to be recorded as a credit to additional paid-in capital. Be able to compare and contrast common stock, preferred stock, and debt. So there was a chart in the notes for chapter 10 where we talked about how, hey, preferred stock kind of looks a lot like debt in that usually there's some sort of stated or fixed amount of dividends that preferred shareholders get when the company declares dividends. That fixed amount of dividends is usually stated as a percentage, but so is interest. Interest is stated as a percentage of principal value. So there is some common ground between preferred stock and debt, like notes payable or bonds payable. But common stock is really the one that tends to have the most power because typically that is the class of stock that has voting rights attached to it. Other than that, common stockholders, the reason why there's a difference between preferred stock is that the commoners get the scraps, the preferred shareholders get their dividends first before the commoners get their stock. What are the various dates involved related to dividends? So recall there's the payout date, there's date of record, there's the date of declaration, be able to know what those are, recall what those are in the exam. The various journal entries that you need to understand for what? Issuing stock at par, above par, no par. If a stock has par value, generally it's going to be issued above par. There's going to be some amount received above whatever the par value. Par value can be is usually like tenth of a penny per share. It's something ridiculously small. So there's usually some amount above par that we have to record into additional paid-in capital. But we have to be distinctive. We have to record the stock, credit the common stock account for its par value times the number of shares issued, and then we record the remaining, the plug figure goes to additional paid-in capital. But if there's no par value stated on the common stock, then we just credit the entire amount received to the common stock account. When we purchase or resell common stock, we're talking about treasury stock in that case. We purchase treasury stock that reduces the amount of shares outstanding. We record the treasury stock as a debit balance, which offsets, it acts like a contra equity account and offsets the remaining equity accounts. When we resell the stock, just understand that there's no gain or loss that's explicitly recorded on the income statement. Gains and losses are implied economically, but they show up in the, we plug it into the paid-in capital, additional paid-in capital account if there's a gain or loss. Declaring and paying dividends. Cash dividends was the big one. So when a company declares and pays cash dividends, realize preferred shareholders get paid first. But in particular, if there's any amount that we have not yet paid preferred shareholders, the cumulative rights indicate that preferred shareholders need to get paid any outstanding dividends first. So if we skipped a couple of years of paying dividends, preferred shareholders get paid those dividends in arrears first. Then the preferred shareholders get paid the current year portion of dividends that they are entitled. The rest of the scraps go to the common shareholders. Aside from cash dividends, recall stock dividends. Stock dividends, they're small, are usually have a 25% issuance. Anything that's above 25% is considered a large stock dividend. So make sure you understand the journal entries for stock dividends and be able to distinguish between small and stock dividends, how those differ. Now, the previous chapters, this is kind of big. So just recall that down below, I've given you the specific topics that you want to review in your notes. So I recommend looking at these, skimming through these learning objectives first, and then going back and reviewing all these other topics, because these aren't necessarily presented in any type of specific order. So what are the various principles and assumptions using accounting? That was in chapter 1, mind you. So principles were things that were the revenue recognition principle or the expense recognition principle, otherwise known as the matching principle. And those two particular principles were the ones that are ones of the most highly utilized when determining accruals for receivables and inventories and liabilities as well. So we accrue for salaries and wages because, for instance, the expense recognition principle requires us to recognize expenses in the period that they are incurred. In particular, match them with any revenues that were generated because people worked for us. Receivables, we recognize revenue when the revenue's been earned. And there were those 5 little steps that we went through to determine that. But that's the revenue recognition principle that tells us why we accrue for these things before or after cash is exchanged. What information is included on the various statements? So the balance sheet, income statement, statement of retained earnings. You might want to go back and take a look at how all those different financial statements flow into each other. Balance sheets report assets, liabilities, and equity. Income statement, revenues, expenses, gains, and losses. Statement of retained earnings will show net income next to any dividends that have been paid out. How are the financial statements prepared? In what order in particular? So income statement, statement of retained earnings, then the balance sheet. So go back and take a look at the different practice we went through in class on that. What role does a trial balance play in preparation of financial statements. Arguably the most crucial, because the trial balance has several different columns. And the first two columns shows the unadjusted balances per the ledger. The ledger shows different balances in cash, in revenues, in common stock, in notes payable, etc. We just take all those ledger accounts, throw them in on the trial balance as the unadjusted balances. Then we adjust those for things like depreciation expense or uncollectible accounts expense, things like that. Those adjustments result in an adjusted trial balance. The adjusted trial balance is what we use to prepare the income statement. Once we do that, then we can do all of our closing journal entries, create a post-close trial balance, which helps us produce the balance sheet, statement of retained earnings, et cetera, et cetera. On a classified balance sheet, what accounts would appear as current versus non-current assets, right? So what items appear as current versus non-current liabilities? Well, realize that most of you understand, for instance, that equipment tends to be long-term, things like supplies and prepaid rent tends to be short-term. Current liabilities, I think the concept that some of you struggled with was this notion that notes payable, while the notes payable is typically long-term in nature, it can end up as a current liability. So as of 12/31/2018, if I expect to pay off a note payable with a bank in the next year, 2019, I need to make sure that that note payable, it shows up as a current liability. How does the net book value, or NBV, change over time for long-term assets? Well, net book value is the difference between the cost of an asset, say equipment, and its accumulated depreciation. So cost minus accumulated depreciation gets us net book value. Net book value generally decreases over time. Either it decreases in a straight line way, or some type of accelerated way, or some type of haphazard kind of a way. But realize the reason why net book value changes is conceptually it's being used, there's wear and tear. But also net book value decreases over time because accumulated depreciation increases over time. Accumulated depreciation is the historical depreciation expense that we've recognized to date. So every year, accumulated depreciation gets bigger, net book value therefore gets smaller. How is net realizable value, or NRV? NRV is different from NBV. NRV, net realizable value, is the difference between the gross amount of accounts receivable that people owe us and our estimation for the allowance for uncollectible accounts. So we know that not everybody pays us the amounts they owe us. So the estimate for that amount is the allowance for doubtful accounts. The allowance for doubtful accounts, another term for that is the allowance for doubtful accounts, the allowance for bad debts, a lot of different ways. But in general, it just means it's an estimate for how much of receivables we don't expect to collect. We subtract that allowance from the gross amount of receivables to determine NRV. How do the shipping terms, FOB shipping, destination point, affect the timing of certain transactions? Well, if I'm the seller of certain inventory, then if I sell goods FOB shipping point, that means the moment the UPS truck drives away, shipping the goods to my customer, that's when I can recognize the revenue associated with that sale. And at that same time, the buyer will recognize the inventory in its own financial accounting system. Destination point just means all those things happen. The transfer of title happens when the customer actually receives it. So that is how it affects the timing of different transactions. Let's see, what determines the balance of cash and cash equivalents on the balance sheet? So this is one that I think some people struggled with on the, I think it was the second exam. Cash equivalents are essentially investments. By default, investments have their own line item called investment marketable securities on the balance sheet, shown right after the cash and cash equivalents account. But if any of our investments that we get into have a 3-month or less maturity period, meaning that we only are investing for 3 months or less, those show up as cash equivalents, not as investments. It doesn't matter when we buy it or when it's expected to mature. If the investment is like a security deposit or some sort of time period investment, like in saying commercial paper, if that investment matures in 1 day or in 3 months, it's considered a cash equivalent, and that needs to be shown as a cash and cash equivalent on the balance sheet. Which items appear on the bank side and the book side of the bank reconciliation? So go back to your notes and recall all those different acronyms you use, like date of birth, right? Date of birth on the bank side, meaning deposits in transit, outstanding checks, and bank errors, things like that. If you can recall that, then you'll be able to understand which is on the book side. What are this now in terms of the bank reconciliation? I'm not going to ask you necessarily to create a bank reconciliation, but I'll talk a little bit more about what else you need to do with the bank reconciliation. So just understand, have an image in your mind about what actually appears on the bank reconciliation on both sides. What are the steps in the accounting cycle? Those of you who did the credit, you know this. Identify the transaction, record the journal entry, post it to the ledger, et cetera, et cetera, et cetera. Compare and contrast adjusting journal entries with closing journal entries. Adjusting journal entries we do on a fairly frequent basis. We'll do them either once a month or once a year for things like depreciation, okay, to accrue for salaries and wages, okay. Those are different from closing entries. Closing entries are what we do to empty out all of the income statement accounts. So the revenues, expenses, gains, and losses that show up on the income statement, those need to be emptied out into your retained earnings. The process by which we do that is through closing journal entries. How do debits and credits affect the balances for assets, contra assets, liabilities, etc.? Generally speaking, debits and credits, they have a different purpose. Debits increase, for instance, assets, but credits increase contra assets. So be aware of how, at the very least, these different account types increase with debits and credits. If you know how all these accounts increase, like I said, I think this was when chapter 2 or 3, when we talked about debits or credits, I said, just be able to recall how these different accounts increase. If you can recall how they increase, then you know what the normal balance is for those specific accounts. So assets increase with a debit, therefore assets have a normal debit balance. Liabilities increase with a credit, so liabilities have a normal credit balance. If you are good to go with that, then we'll just move on. Be able to calculate the market price of a bond. So I'll give you information about a bond's principal value and its stated interest rate, for instance, and I'll ask you to determine using present value factors. I'll ask you to tell me what the overall proceeds or market price received from the issuance of those bonds were. But that's about it in terms of determining that. So I'll give you these, just like we did from the exam 5. I'll tell you specific factors. You just need to know which ones to apply. Ending inventory, cost of goods sold, gross profit. Those things are determined, or those things are affected by whether or not the company uses FIFO, LIFO, or average cost. Okay, so if I give you certain information about beginning inventory and what the purchases were and the sales were, tell me what ending inventory is. Or if I tell you ending inventory but not sales, you need to tell me what cost of goods sold is. Okay, I think that people tended to make mistakes on, I think it was the 3rd exam for this stuff because they didn't read it carefully. So if I tell you that we started off with 100 units, we bought 100 units, we sold 100 units, right? That generally means, hey, figure out what ending inventory is. But sometimes I may ask, don't just tell me what ending inventory is, tell me what the cost of goods sold is. So you have to multiply those units sold by whatever their actual unit cost is under FIFO or LIFO to determine cost of goods sold. So the key thing here is just read these things very, very carefully. I don't want you guys to miss points on that. What are the, see here, so changes in cash. If I give you information, transaction information for, let's say, inventory, my recommendation is be able to sketch out a T account for inventory. And if I tell you beginning, pop in the debit for the beginning balance, the beginning balance amount. If I tell you ending, pop in that debit ending balance. If I tell you what the purchases were, pop in the debit for the purchase amount. And the question might ask you, for instance, hey, what is cost of goods sold for the period? And that's the credit. So you needed to be able to do some algebra to determine these things. They'll be able to do that for receivables as well. Here's the beginning, here's the ending, here's how much we collected, how much did we sell on account, things like that. What are the various journal entries for issuing bonds at par, premium, or discount for cash? So if we issue bonds, typically we issue them above or below par. But if we get cash higher, we get more cash than the par value, that means we have a premium. So we have to debit the cash, credit the bonds payable at its face value. But if it's a premium, we would also have to credit a premium on bonds payable. Accruing interest and paying interest on notes payable. That's pretty straightforward, multiplying the principal by the stated rate. The way people make mistakes on this is they fail to take into account that maybe a note only existed for, say, 2 or 3 or 4 months of a year. So if I ask you for interest expense on a note payable, make sure that you calculate the number of months correctly. So if you, so I think I told you a couple different ways of dealing with interest calculation. Take the total amount of interest for an entire year, divide it by 12, then multiply it by the number of months outstanding. That was an option I gave you. For bonds payable, I think I only ask you on the exam to calculate 1 or 2 rows, determine what the interest expense is. If you use straight line or if you use the effective interest method, if I tell you, just be able to, if you know that, if you can calculate the interest expense, you should be able to calculate any type of amortization as well. For purchasing or selling inventory, realize that the purchasing of the inventory is pretty much all just going to debit inventory, credit cash. But when we sell inventory, what happens? Well, under the perpetual method, recall that there's 2 journal entries. The first journal entry is the sale. So did we get cash for selling, say, phones? Debit cash, credit sales revenue. But also, if we're using the perpetual method, you need to follow that up with a debit to cost of goods sold for those phones and a credit to inventory. Under the periodic method, we don't do that second journal entry. We wait to the very end of the year to determine what cost of goods sold is. What are the journal entries for purchasing and selling long-term assets? So if we buy equipment, debit the equipment. If we sell the equipment, realize that we usually get cash of some amount when we sell equipment. We have to credit the equipment account away, and we have to debit accumulated depreciation to date. Whatever the balance is in accumulated depreciation to that date of sale, that needs to be debited away. So my recommendation is practice just sketching out what those journal entries are for selling long-term assets. Realize if there's a gain or loss, use that. That's usually just a plug figure. Okay, so if we need a debit, it's usually a loss. If we need a credit to complete the journal entry, it means there was a gain on the sale. Accruing depreciation and amortization expense. Depreciation is done for tangible assets like equipment. We debit the depreciation expense account, but we credit accumulated depreciation. We don't credit the equipment account directly. Amortization, it's okay to go ahead and credit the patent account directly. We don't need an accumulated amortization expense account. We'll just debit amortization expense and credit the patents or whatever it may be that we're amortizing over time. Depreciation can be based on straight line. I don't believe I asked you any double declining balance questions, so hopefully that'll be okay for you. But just be aware of how to do the journal entries at the very least for these things. If there are book side adjustments on a bank reconciliation, book side adjustments, realize that the book side starts off with whatever our balance is of cash in our general ledger. Then from there, we start to make adjustments on the book side for things like things that the bank did that we didn't know about. So if the bank charged us a fee, thanks bank, if the bank charged us a fee and we didn't know about it until the end of the month, we will go ahead and throw in an adjustment for bank fees. Okay, bank fees require a reduction to our cash account. So anything that's on the book side of the bank reconciliation requires us to make a journal entry to the cash account. So if there's fees that appear, we would have to credit cash for those fees, debit bank fees expense or something like that. Closing books were the journal entries for the closing the book process. Recall that if all the income statement accounts need to be zeroed out, we empty those accounts into retained earnings. So all the debit balances for expenses, for instance, all those debit balances need to be credited to zero. So depreciation expense will have a debit balance. We credit that account and we debit retained earnings for that amount. So we essentially transfer that debit balance into retained earnings. We clear out the all the different revenue, expense, gain, and loss accounts, set them to zero so we can start the year fresh. Okay, I think it talked about there's 50 questions. Here's the breakdown. Here's what I'll recommend you focus your effort on. Procedural questions tend to be the more challenging ones, in my opinion. Tips, same thing as you've seen before. Go back and review all your lecture notes related to these topics. Review the homework on My Accounting Lab as well. So go back and specifically look at the homework 7.4. Look at your homework for 8.3, 8.4. Look at your homework all the way back to 1.2. That'll give you an idea about the type of questions that you should expect to see on the final exam. There's additional practice on My Accounting Labs as well. So where are those? Right here. So if you go into My Accounting Lab, you'll see there are practice exercises for 10, 11. But you still have the ability to go back and look at practice exam questions for previous chapters. Those should still be available to you. So go back and take a look at those if you need more practice. There's also the practice exams. And again, I recommend you use these not as homework, but use these as a check. See how well you can actually do these questions. All the exam questions on the final exam are multiple choice. So you may see some fill in the blanks on the practice exam. It's just meant to help you prepare for the exam. But all our actual exam questions for the final are all multiple choice, 50 multiple choice questions. But use the final exam practice as a means to determine how well you actually know the material. If you're getting, say, 50% on these practice exam results and you're not happy with that, and that's not what you need on the final exam, go back and review your notes. Go back and seriously take a hard look and study the material from those previous chapters before you go back and do it again. Strongly recommend, again, that you do the practice exam with Proctorio. Okay, make sure you're set up for that. Practice exam. Be mindful of your time as per usual. I don't think people have or struggle with the time because you have 2.5 hours to take the exam. So you have 2.5 more time to take the final exam than your typical midterms. Your midterms are 20 questions. The final exam is 2.5 times roughly, but that's not necessarily going to take you the full 2.5 hours. Just be slow. If you got extra time at the end of your final, I strongly recommend you go back and review questions that require calculations, especially those that involved dates. Be able to scratch things out, draw things out on scratch paper. This is not a do or die exam. It is a big exam, but it's just meant to go back and check to make sure that you still retain all that material that we studied. But I'm not going to overwhelm you with the minutia. I'm going to keep it high level as much as possible for these things. So again, as a reminder, I've got office hours tomorrow as usual, and I'll have office hours before our exam before our Wednesday exam. I'll also have office hours on Tuesday as normal. Aside from that, what's left over is talking about the extra credit, the bonus points for completing the survey. So I am a big fan of awarding students for their work. So you took the time and effort to fill out the course evaluation. I said you needed a target of 80%. Guess what? You did that. 80% was met. So I'm going to award you guys an extra 6 points. 6 points is like extra credit. It's just awarded to your overall course score. So congratulations on that. That usually helps give people an extra 1% bump at the very least to get them over a threshold. So good on you for doing that. I thank you for taking that seriously. I take these seriously. So thank you for taking this stuff seriously because this helps me just get better over time. Also, thank you for giving me informal information throughout the term. It's helped me sort of, modify these exam questions as I go. So appreciate anything that you've done to help me out. Um, that 6 points. I'll show that up on Blackboard today. That'll just be reflected in your total. Everyone will have an extra 6 points added to their current total overall course points earned. I will send that. I will get that updated today for you. Update that on Blackboard. If you have any questions on any of the material going forward, or just want to talk to me in person, you're welcome to join me during office hours, or you're welcome to stick around and hang around on this Zoom meeting. Other than that, you guys are free to go. Thank you for sticking with me through this final episode of Financial Accounting. Don't forget to tip your bartenders on the way out. Cheers. Stop it now. Neat. Oh, I hate me.
To school where remote learning can be as remote as you want.
Stop sharing.